Okay, good evening everyone, and welcome to our webinar. Um, we are going to be covering tonight basically just some questions that we've had regarding a couple problems, and then we're also going to go over the midterm. I'm actually going to do that first. And I just want to bring your attention to in Module 4 on the Blackboard website. If you go in and take a look at this, you will go down to the bottom and you'll see a Module 4 and Midterm Study Guide. This is what it looks like. Okay, so it's the basic study guide that for the quiz, for Module 4's quiz, and then it talks about the midterm exam. It's telling you everything that is part of the midterm, and then it tells you the areas that are tested. Someone had asked me what formulas that they needed to know. It's not so much formulas, it's more of how to calculate various things like net income, owner's equity, total liabilities, total assets, all of these items mentioned here. And not only do you have to know how to calculate them in a straightforward manner, but let's say on, let's see, gross profit. Let's say you were given the gross profit and you were given income or revenue. And then you were asked, so what are expenses? You have to be able to figure out how to calculate back into that. Okay? All of the questions are multiple choice. Okay? It will ask you to choose how a GL account is affected in a given transaction. For example, if you purchase something on account, what happens to AP? Increase, decrease, or unaffected? And those are your three choices on these types of questions. Increase, decrease, or unaffected. Okay, there could be some tricks, and there are. Like it could ask you what happens to cash when something is purchased on account. In this case, cash would be unaffected. Okay, and the reason for that being, if you purchase something on account, it goes to AP, right? And nothing happens to cash at that very moment when it's purchased. Later on, after it's paid for, cash is affected and AP is affected, but that's not what the question's asking. So I just want you to be very aware of that and make sure that you read these questions carefully. It is meant to make you think. It is meant to trip you up and see if you're paying attention. One of the greatest assets of any good accountant is that they have a very strong attention to detail. So you need to make sure you're paying attention to that. Okay? It also goes further down the line to ask what will happen to owner's equity if salary is paid. Okay? So you have to be able to carry these all the way down the line on the financial statement. So in that case, like if you pay a salary, obviously owner's equity is going to go down, right? It's going to decrease because you don't have as much equity in your company after you pay out the salaries, right? So just go in and study those, think about them. You know, make sure that you're really able to go all the way down through this and calculate it. This is not an easy midterm, okay? So just make sure that you're prepared for it, okay? Make sure you're ready to make calculations. You have 90 minutes to complete it, okay? So let's talk about that. It says 80 here. I've actually increased it this year to 90. I know it's only 10 minutes, but you'd be surprised. It helps. There's 25 multiple choice questions. So you should be able to fully complete 25 multiple choice questions in 90 minutes. That shouldn't be an issue. Okay? Fill in the blanks has to be an exact match to receive any credit. The system is grading these. If it is not an exact match, it will not give you credit for that answer. So make sure that you are spelling things correctly. Check your spelling. And understand that no partial credit is going to be given on any of these questions. Okay? So it's an all or nothing. So one thing to note in here too, and I need you to pay strong attention to this, do not use a dollar sign or decimals. Use commas to separate numbers like 25,000. This is the exact format a number should appear in, okay? And it shows you right here, $25,000. That's the number that you will put in on these fill-in-the-blank questions where you have to calculate something, okay? So don't use a decimal. So don't use a decimal, okay? And make sure you're formatting your numbers like this. I'm also going to put an announcement out there to make sure that you understand this before you take your midterm exam. Because if you don't format the questions in this, or the fill in the blanks in this manner, you will not receive any credit for it, okay? So just make sure that this is the case, that you fill this out correctly. Each question is worth 10 or 20 points for a total of 350 points. Again, all questions are all or nothing. You either get it right or wrong. Okay? So don't panic, but just make sure you're following the instructions and that you have prepared yourself before you take this. I suggest that if you're going to take this on Sunday, that you use all your days ahead of this to make sure you know what you're doing and you know how to get these particular items, you know how to calculate them inside and out, forward and backward, and with some information missing. Okay, so just make sure you know that. The other thing that I'm going to recommend to you is that you go back and you take a look at all of the homework answer keys and work through the problems using the answer keys again, okay? You don't have to actually turn it in or anything like that, but it will help you to prepare for this midterm, okay? Make sure you understand how the answer keys come to those numbers. For instance, like on some of the journal entries, some of you have missed that you only have to calculate for part of a period. Okay, so like for instance, it's only asking for 1 month out of a 12-month total. Okay, so it gives you the 12-month total, but you're only doing a journal for one of those 12 months. So you have to divide that number by 12, for instance. Okay. So that should be pretty much it on the midterm. Let me know if you have questions on that. And then we also had another question come in via email. Let me get to that real quick. Pull this over here. Also make sure that while you are reviewing that you go back and you are using these webinars that I had previously recorded. Some people are asking questions that I know I've answered on the webinars, so make sure you go through those, okay? They're there for you to use. I know they're long, but it does show you how to calculate all the problems. So I want to make sure that we're using those as well. All right, so someone wants me to go over the homework on E6-2B. Okay, so let's see here. That's in our current module. I just got out of it, did I not? Yep. So take a look. Okay. Alright, so E-62B, let's go to that in the chapter. One other thing that I want to cover as well real quick is some key pages, and I'll do that after I answer this question. Okay, so here's E62B. It's asking you to calculate via the periodic method using the periodic inventory system. So it gives you your numbers, and then you're going to calculate the cost of goods sold for May and inventory at May 31st using the three methods: the first in, first out, last in, first out, and the weighted average cost method. So to help you with the first in, first out method, you have to understand that when it says first in, first out, it wants you to use the amount that was purchased the latest. Okay? So in this case, the purchased amount that was purchased the latest is 160 units at $36 a unit. Okay? So first in, first out inventory would be calculated by doing, let me pull up an Excel spreadsheet here. So basically what you would do is say, okay, I've got 160 units, okay, and the price per unit, and then what is your total cost on that, okay? So 160 units at $36 a unit. Use your formulas to calculate, so you're going to take that times that, and that gives you your total cost, right? So in this case, according to the book, right, we have beginning inventory of 150 units, okay, and then you have purchased 100 units, and you sold 180 units, and then you purchased another 160, okay? So using the first in, first out method, you then have to figure out, well, how many units do I actually have out of, so you have 150 plus 100 minus 180, okay? So that's going to tell you what your remaining amount is that you would do at $35 per unit, okay? Because if you're taking first in, first out, okay, it's basically saying that you're going to use this $35 per unit. So what happens is, it looks like this. Let me expand this out just a little bit so you can still see the book. All right. So basically, you have 150 units of your beginning inventory plus, let me put an equal sign in front of this, 150 plus your 100 units purchased minus the 180 you sold, right? So that's your 70, all right? And the last amount that you purchased was at $35 per unit, right? So you multiply that together, and if you want, you can just copy this down and it'll give it to you, okay? So you have a total, because you just purchased those 160, so you're going to add these two up, right? You have a total of 230, and your total amount, or your total cost, is just summing these two up. Okay, so hopefully that makes some sense to you as to how to do the first in, first out. Now the last in, first out is a little bit different. So this was FIFO. This is LIFO, right? So if you use the same thing except do it last in, first out, okay, your ending inventory is going to be, or I'm sorry, last in, first out, ending inventory is going to be calculated like this. You're going to have 150 units, right, at $30. Bring this formula down. I'm actually going to put it here too. I'm going to bring this row down. So all I'm doing, guys, is copying and pasting, in case you're wondering. Okay. And then the next adjustment for the last in, first out is going to be, so you sold 180 units, right? And you've got basically 250, right? So let's see. It winds up, you're going to have 80 units at $35 because you're taking the units out of the 150 or the 160 units that you just purchased, right? So in that, or sorry, not that you just purchased, the 180 units would be taken out of the 100 units of inventory first, and then the 150 units remaining, okay? So in that case, you've got 80 units, and then you've got 35 units, and so that totals it up, and then of course you just add the two columns, okay? So the main part is just figuring out which direction you need to go. And the weighted average cost, that's fairly self-explanatory as well. You just take, and it's literally what did you purchase stuff at, right? And then getting a weighted average cost. So the in that case, you have to do an added calculation at the back end of it to come up with, oops, that. So you're going to take your 150 units, you're going to take the 100 units at $35 a share, or $35 a unit, not a share. I'm talking stocks here. And the 160 at $36, right? And then you're going to add those up. Okay, and then you've got to do your weighted average cost calculations. So you basically have to take these two numbers and divide them by each other. So the weighted average cost looks roughly like this. It's just that divided by that. And it gives you 33, 56, blah, blah, blah. And your ending inventory, which is just a total of what's left over. In this case, it's going to be, so you take all of your 410 and subtract out what you sold, which was 180. right? And so you have 230 units left times the 33. So hang on, let me put this in a formula. 230 units times this 33, and that's going to give you the 7719. Once you put that in play, you can then also get your cost of goods. So your COGS, cost of goods sold. So to figure that out, you then have to take that 4,500, so equal sign 4,500 plus the 33 or 3,500 plus the 5,760 and minus this 7,719. Okay, and it gives you that 6041. So thing to note on this, if you want to round to the nearest dollar, that's fine, or if you want to round to 2 decimal places, that's fine. Either way, I'm not gonna count off for that. Okay, so that's how you do this periodic method. Now, the perpetual method is actually explained in Appendix 6A. Okay, so if we go back here, right? So this is explaining to you all of the calculations of the periodic and perpetual methods. So the perpetual method inventory system is right here in 6A. All right, so it walks you down through this example of how to calculate that. Okay, first in, first out, last in, first out, weighted average cost. Okay, the perpetual method is a little bit different. So basically, what it does is using the perpetual system under the 4 costing methods, you get the specific identification, first in, first out, last in, first out, and weighted average cost. Okay, so this is kind of explaining to you exactly how this runs down. I would mark this in your book because I don't think it's going to be on the midterm. Pretty sure it isn't, but it might be on the final. So I would mark this page in your book because it does a good job of walking you down through the various methods. So first in, first out method, each time that sale is made, the cost of the oldest goods are charged out of the cost of goods sold, right? Visually, the FIFO method appears like a conveyor belt, and it shows you kind of how that works. Okay. So here's the perpetual method of how it kind of flows. You've got 90 units at $11 a unit, $990, right? And then you've got these that are sold, right? And so it kind of walks you down through how many units you've got left versus the unit cost and what the total is of that, okay? And then how these factor into each one of these, okay? Same thing with last in, first out. The cost of the most recent inventory purchased is charged to the cost of goods sold when the sale occurs. Okay, so this is the one where you take it off the back end. Okay, and it works you down through that method as well. Then you've got the weighted average cost. Same type of calculation as what you did with the periodic method. Okay, so let's look at let's go back up here. I want to show you guys, see if I can find it. There's a very good explanation up here in the chapter as well of each of these. So here's the specific identification methods. Here's the first in, first out. Again, assumes the oldest goods or the earliest purchased are sold first. Okay. Then it walks you through how to account for those. Last in, first out assumes that the most recent ones are sold first. Okay. And then you've got the weighted average cost as well, which is basically finding the average cost. All right. So make sure you're going through all of this and taking a look at these examples that they are giving. All right. For some reason, I told them my computer's been acting really weird lately. So, in terms of my internet, not my computer, just wants to freeze up. All right. So hopefully that helps you clear up a little bit of what we're looking at with the perpetual versus the periodic. So let me know if you have any more questions on that. Does anybody have any other questions on that particular problem that's on right now? If not, we're going to go ahead and talk about a couple of other things. Like I said, if you do have questions, email me, okay? I'll be happy to answer any other questions, even if you weren't on this webinar, okay? So let's talk about, real quick, somebody also asked me if there were good places that I would recommend in the book that we needed to mark for the midterm. And the answer to that is yes. One of the places is on page, well, it's on page 130. Okay. I've actually referenced this a couple of times. Make sure that you have this marked. Maybe, make a copy of it or something like that, or have it, out in front of you while you're taking the midterm. Okay, this will help you tremendously. Okay, again, it shows you all of the calculations, how things flow to each other, what is taken out of what. Okay, so it allows you to see this all in one place. So this page 130 is an excellent reference that I would keep marked for your midterm. Okay, let's see. I would also go through and make sure that you have, maybe take some Post-it notes, okay, and stick them on the pages and show, like, how when cash is received, I would write on the Post-it note, cash received when revenue is earned, and then right here, cash received when after revenue is earned, before revenue is earned, and just keep track of these journals, okay? You might want to mark like where you have an unadjusted trial balance to work from. Definitely mark your depreciation one, because I know that's one that trips some people up. So page 123, make sure you understand the depreciation entries, right? Deferred service revenue, make sure you mark that one. If you want a general journal example, this would be an excellent one on page 127. Okay. Also make sure that you mark page 127 for the 4 types of accounting adjustments. Okay? So this is an excellent resource for you. All right? This is all in chapter 3. So chapter 3 is kind of a critical chapter that you definitely want to go back and review. This also has your trial balance and balance sheet with the adjustments. You might want to mark that. It's page 130. Closing revenue. I don't think you're going to have too much on the closing the revenue, that stuff. It's more, understanding the journals and what's, how to do those. So chapter 3 is a good resource. Understanding financial statements. Okay, so for your components of a balance sheet, mark page 180, 180. These are all the components of a balance sheet. Okay? Then let's see. These are also good little ways right through here of how to calculate things, right? So here's how you get your current assets. Here's how you get your long-term assets, intangibles, current liabilities. So I would mark each one of these examples with, this is how I calculate, maybe make a little note on the post-it note, calculate, and then whatever it is. So for instance, calculate current liabilities and mark it on that page. I'm telling you, if you guys have this stuff marked out in your book, it'll be quick and easy for you to flip to for each problem that comes up. Okay? So this is what I would do, to prepare for your exam. You're welcome to use your books, your notes, your problems, whatever you want to pass this exam. Okay? Just make sure you definitely pay attention to the formatting of your numbers and make sure that you pay attention to the question, because there are a few that will trip you up. Okay? If you want to see it all in one place, here's an entire balance sheet. But you need to make sure you study it and you understand how they're getting to these numbers. Okay? I think that's pretty much it. What other questions do you guys have for me? If you need to unmute, go ahead. Or let me know you need me to unmute you. Anybody have any other questions? Okay. All right. Well, if there are no other questions, again, email me if you do have a question that you want to take offline, and I'll be happy to answer it. I will be on the road tomorrow night and part of Thursday. So if I don't get back to you right away, then I will definitely get to you as soon as I get off the road and get to my hotel. Okay? So you all have a great week. Study hard for this exam. I know you're going to do well. Everybody's doing a wonderful job. Keep up the good work. And just keep asking questions as you need them. I'm here to help if anybody needs any help. Okay? So thanks, guys, for attending. I will get this posted as soon as it will upload. All right? Thank you all. Have a great week.